Hi, this is Steve Janikowski with Brower Janikowski. It's April 14th, 2016. We wanted to spend a few minutes with you today to give you an update on our views of how the economy is doing and how the stock market's doing. As you know, the stock market's been extremely volatile so far this year, and some people are worried that the economy is slowing down, maybe even slipping into a recession. Let's take a look at two important indicators that we follow that will give us some insight as to where the economy and the stock market are likely to go. Number one, the price of oil, and number two, the strength of the US dollar. Let's take a look at the price of oil first. This chart shows how oil has plummeted about a year and a half ago from $110 a barrel down to well under $30 a barrel. Recently, oil has started to trend up to just under $44 a barrel. Let's take a look at the recovery in a little bit more detail though, so far this year. Here you can see that oil got to a low of just over $25 a barrel and has had a fairly strong recovery up to in the low 40s. The implication for this recovery in the price of oil is that it will help the energy sector, which should help the overall economy and also help the overall stock market. Number two, let's take a look at the strength of the US dollar. This chart represents how the dollar has been doing against a basket of foreign currencies. So we go back to about 2011, and remember, the stock market actually did pretty well for those few years and only started to weaken in 2015. Notice what happened in 2015. The price of the dollar started going up dramatically. Now, what does this mean? Well, the big implication is that when the dollar goes up, it makes our goods and services more expensive and less competitive in the world economy. So that's going to hurt company earnings for the multinationals that sell overseas. It's also going to hurt the overall U.S. economy. Think of it as a headwind against growth and company earnings, which is going to hurt the stock market. And sure enough, that's exactly what's happened to the stock market over the last year and a half. Now, as you see at the tail end of this, that the dollar has actually weakened, and which is a good sign in our view, and actually we feel that the dollar is getting to what we call fair value and is likely to begin stabilizing at this level. If it stabilizes, it's going to improve the performance of companies, which will help the stock market and help the US economy as well. So both indicators, in our view, appear to be in the stabilizing mode, which is going to be good for the stock market and the US economy. So thanks very much for listening. If you have other questions about what we've talked about today, feel free to call your advisor or me personally. We're happy to talk at any time. Thanks so much. Have a good evening.